Hey guys, RC Peck here. One of the questions that I think people have over and over and over again, though they might not use these words, is does it matter? Like, does this matter? Does this matter? Should this matter? This matters, right? This matters, right? And we're hit with a lot of information. The word a lot doesn't even do the justice of how much data is hitting your brain on a minute or hourly or daily or weekly basis. But we're getting all this information in. And one of the problems people have is they don't have a filter that knows how to filter it out, right? Because I believe what we're actually asking ourselves over and over again is, does this matter, right? Or we're making up in our brain, this matters, therefore I'll do this. This month, we're in a period where the technology sector actually has its best 30-day run out of the year. At the same time, the S&P 500 has its worst 30-day run out of the year. So, which one do you believe? If you believe absolutely at all costs we're in a bull market run, then you fall for the technologies in its 30 best days. If you think the world's going to end, then you fall for the S&P is going to crash. Right? Do you get it? It's your own bias. So on the screen here, if you look at the screen, this is the S&P 500 with dividends reinvested, and it's priced in bonds, right? So it's not priced in US dollars. So basically what you're seeing on the screen is if the black line is going higher, that means US stocks are outperforming US bonds. So if you're bullish on the stock market or you want the stock market to go higher, you really want that black line to go higher. Now, I'm answering the question, does it matter, or when does it matter, or when does a fall matter? And the problem with most investors is they've been taught to think it through. They've been taught to read it through. They've been taught to ask their big box advisor. But actually, that's not a good way. The best way is to really just get trained to see what's happening. So on the screen here, you have S&P divided by the bond market. Okay, so you see the big yellow area. If the black line's in the big yellow area, not a problem. That means stocks go higher. If the black line is above the yellow area, that means stocks are really going much higher. And then on the screen, you see the black line above that horizontal, thick green line. Basically, that's the line in the sand. If the black line stays above that green horizontal line, and this is a 3.5-year time range price chart, then it's hard to be bearish, or I would argue you don't want to be bearish on the stock market, right? You want to be bullish. And of course, when it's in the yellow, you still want to be bullish, but it's kind of that messiness. And so if you kind of zoom over to, or you kind of focus in on this area right here, you see this line coming back and kind of testing the yellow range. Like, hey, should I go back in there? Should I go back in there? By the way, it's okay to go back in there. Again, you want to really notice that, not so much notice, but you want to find and be trained to know what matters. And so this is a price chart I want to show you that nothing matters unless, or until the black line falls below that horizontal green line. It doesn't really matter, right? The stock market's going to maybe either go sideways at worst or go up at best. Now, I want to stick with this kind of doesn't matter theme because that's what we're talking about here. So this is a price chart of gold going back to about not quite the beginning of 2011, but we have about 9 or 10 years of data here. And it's the same question, like, does it matter? Does it matter? How do you know if the price move matters? So gold right now is moving down. It hit a new lifetime high. Let me just see my inspect line is not working. Here we go. Now it's working. So August 12th-ish, it hit a new lifetime high of about 270. And right now it's correcting back down. Now, it's in new lifetime high territories. And this price chart of gold is priced in US dollars. So really anything above this zone, you've got to be bullish, because you can see back in 2012, it couldn't break above it again. So that's about $1,800, right where my gray horizontal line is, right about $1,800. Now it broke above that to $1,900. So that's a fair range to look at too. But the point is that you want to understand what price points matter, what price movements matter. And as you can look on the screen here with gold, gold has volatility. You want the volatility to go to the upside. And as long as more of the volatility is to the upside than the downside, then you're good. And every bull market, guys, you got to understand this. Every bull market's job is to make sure the least amount of people are part of it. That's every bull market. And so we come back to the does it matter? You want to find price points where like, okay, if whatever happens above it, it doesn't matter. But if price breaks below, X price, then it does matter, right? Because this video is really just kind of talking about, does it matter? Does it not matter? Now, I know a lot of people are getting hit with a story called the US dollar is going to lose its reserve status, or the US dollar is going to crash. So here's a price chart of the US dollar going back to 08, so about 12 or 13 years. So first of all, the dollar actually has to crash before it loses its reserve status. And money printing started in 08, and 08 is way down here. So now you might say, well, they're printing more money. But we have to go with what's happening, not what you believe should happen, or not what your moral judgment thinks should happen, but what is actually happening. And what's actually happening is, as the U.S. as the U.S. central bank prints more money, it actually has helped the price of the dollar. And again, you can see that here. Literally, you can see the dollar over this 12, 13-year period. It has a huge move up, then it goes sideways, then it has a huge move up, then it goes sideways. So, question we don't know is this going to have a quote unquote huge move up again? But right now, we don't know that. But right now, what we do know is it's in kind of that yellow sideways zone, and it's been there for about 6 years. And as long as it stays in there, it doesn't matter what it does. Now, you obviously can see these periods where there's been kind of these blowouts where the price breaks above this yellow zone, breaks down below the yellow zone, breaks above the yellow zone. It didn't really break down, okay? And again, does it matter? If the US dollar is going to lose its reserve currency, then you'd probably believe that it would fall against the other currencies, would be one of my guesses. Now, you might say, no, all currencies on the planet, all fiat currencies on the planet are going to lose its purchasing power. Okay, well, guys, that started about 50 years ago, 50 years ago. So the price chart you have on the screen here is a price chart of gold going back 50 years. And back at the beginning of the 1970s, gold was worth about $35. Today, it's worth about $1,870. So that's a little over 50x. So gold's costing about 50 times more than it cost 50 years ago. So if you're like, oh my God, the dollar's going to lose its reserve status, and it kind of already has, like, it costs 50 times more dollars to buy gold. And gold is an asset that's in many ways been around the longest, right? It's the longest either currency or it's the longest commodity. It's the most tradable asset we have on this planet, meaning it's been getting traded for 5,000 years. So it's got some pretty good staying power. Now, you might say, yeah, gold. I don't like gold. I want to, hold on, I didn't want to do that. Let me show this. No, hold on. Let me see. All right, here's the S&P 500 right here. So here's the S&P 500. This is the index. Okay. The dollar has been losing its purchasing power if you price it in US stock markets. Now, not quite as bad as gold, right? It costs 50 times more dollars to buy an ounce of gold. With the stock market, it costs about 30 times as much, right? So again, the dollar has lost its purchasing power relative to the stock market, relative to the gold market. And then lastly, let's just compare the US dollar against the basket of currencies it's traded in. So this price chart is a price chart of the US dollar. This is being measured against other fiat currencies on the planet. And so the dollar, now this chart only goes back to 73, but over the last 47 years, the dollar has lost 14% over other fiat currencies. Now, down here is when the US dollar started printing their trillions. And guys, I know how much they've printed or how much their balance sheet has expanded. But the thing is, we only have the assets we have on this planet. We only have fiat currencies. We only have the bond market. We only have the stock market. We only have the real estate market. Like, we can't go to Mars or Venus or Neptune and invest in their markets. So we are in this market, right? Our money has to flow somewhere, and money does not get destroyed. It does not get destroyed. And so coming back to, does it matter? The question is to ask the price charts, does this thing matter, right? Like I did with at the beginning, just showing, okay, well, if this correction matters, if we're going to go into a crash, then we'd probably see bonds go higher and cash go higher in price and the Japanese yen go higher in price. But the thing is, we're not seeing that. And so when you want to answer, and again, I don't know if people are consciously saying, does it matter? But I believe that's what people are actually saying, like, what matters? What matters? And since they're thrown so many things, they actually don't know what matters. And what ends up happening is they get way over diversified, or they end up in just cash because they're scared and they don't know what to do. It's okay to be scared, right? I'm not dissing people who are scared, but they're ending up in a place because of being scared, not because of what the price charts are actually doing. So guys, let me know what you think about this, where I got it right, where I got it wrong. Please leave comments. I read all the comments. And of course, subscribe if you have not subscribed yet, because it makes a difference. Thanks so much, guys, and I will see you on the next video. Okay, bye.
Hey guys, if you love these videos, please go ahead and subscribe to the channel because it makes a difference. Okay, thanks, and I'll see you on the next video. All right.